So, Jack, if we should be expecting this higher for longer environment, then what does that then tell us just about the probability of a recession here in 2024?
In and of itself, Shauna, I don't think higher for longer necessarily translates into a recession. I think we have seen that this economy has been remarkably resilient in the face of an extraordinary rate hiking campaign. This labor market has been extraordinarily resilient in the face of this rate hiking campaign. I do think, though, that risks are increasing. They're building when it comes to at least near-term recession probabilities because of some of those other headlines that you guys had mentioned earlier in the segment, right? We're talking about the looming government shutdown. And yes, the Senate may have be close at least to passing a bill, but the House doesn't seem to be at all. We have the United Auto Workers strike, of course, also sort of threatening automobile production. All of these things weighing on consumer confidence, and ultimately the consumer is the engine of growth. If we aren't feeling good about current conditions, we may tighten our belts a little bit, and that could translate into a short-term slowdown.
That starts to get to the question that I was about to ask, Jack, which is how much gas is left in the resiliency tank from the information and the data that you're evaluating?
It's hard to say, I mean, the consumer, I would say, has defied expectations the entire way through. So trying to say, all right, this is the real time that the consumer finally cries uncle, I wouldn't try to play that game, right? There's too much speculation on that front. I would also remind everyone that while it may not be unique to Americans, I would say that Americans do have a tendency to spend when they aren't feeling so good, right? Retail therapy is a very real phenomenon for the American consumer. So we don't necessarily have to translate lower confidence into lower sales, even though classical economics would typically suggest that. I would say that as long as there's a little bit of clarity on where rates are going, current levels of spending are somewhat sustainable. So my base case still isn't for a recession. I just have to acknowledge that the risks there have ticked up a little bit recently.